Hello everyone. Today we are focusing on an economy update on Spain. When you think about the country Spain, typically the first few thoughts that may come to mind are the famous football or soccer teams, the siestas, the bullfights, the sangria, tapas, and jamon. And within the past few years you might think about the strikes and high unemployment, the overall crisis or crisis as known to the Spaniards. In looking at an economic overview, we may start with the politics, where currently the political party led by Mariano Rajoy has a large majority in the Spanish parliament and has caused a sense of political instability this year due to a grave financial scandal. Also this year, negotiations arose again between the central government and the Catalan regional government regarding talks of a Catalonia independence. With regards to the economy, Spain was finally able to exit the recession in Q3 of this year. However, the country is expected to remain weak as it undergoes a correction of imbalances. At this time, and in the near future, Spanish public finances will continue to post large deficits. As Spain is part of the Eurozone, its economic policy outlook is heavily tied to mutual decisions made by the EU. It is foreseen that the Euro headline rate of inflation will remain subdued and likely for the European Central Bank to respond to Spain's high unemployment rate with another interest rate cut to spur consumer spending and investment. It is unlikely that there will be a tightening of policy in the near future, with hopes that the economy will continue to expand at a growing rate. Through analysis pulled from The Economist, we can see some of Spain's market data as well as its opportunities. Note that with financial assets and an estimated 564% of GDP in 2012, the industry is a significant part of the country's economy. Also, Spain has a well-established market for insurance, fund management, and securities. However, the savings banking crisis and double-dip recession have dented business volumes in recent years. We can see that a key takeaway from these charts is that although a risk remains that the government could be dragged into a further debt, the likelihood of another 2012 period of high volatility and stress is modest, as Spain is looking to continue to expand its economy and recover. Now let's take a look at the GDP breakdown. The country's GDP was recorded at 1.063 trillion euro, equivalent to 1.34 trillion US dollars. We can see many factors as the GDP growth rate is small at less than 1%, but still positive. An alarming point here is that the country's unemployment rate is quite high at 26.83%, accounting for approximately 4.9 million people. As noted, the country runs a trade deficit as it must import many things, such as fuels, for example, which the country does not produce itself. A major economic strength of Spain is that many companies have gained multinational status through expansions in Latin America and also major developing countries such as China and India. This early mover expansion has given Spain a competitive advantage to other European countries. Now this brings us to our key takeaway for today. As Spain is on the path to slow recovery, a current move to develop business in the nation would not be wise, as there may be many issues as Spain struggles to find a balance and establish a stronghold in the Eurozone.